QuickBooks Online 2025, account and settings, looking at the specific settings related to expenses, payments, time, and the advanced tab. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are in our QuickBooks Online Get Great Guitars 2025 project file we set up in a prior presentation. Still working on laying down those foundational items that are necessary before we start building on top of that foundation to construct the glorious financial statements, balance sheet, income statement, and related reports. We're now looking at the settings found in the cog on the right-hand side. We're under the account and settings area. All right, so last time we looked at the usage tab, including the users, and now we're going to be in the expenses tab. Let's start off with the expenses tab. We did the sales tab last time as well. Now we're on the expenses tab. So let me close this out and give a quick kind of look at the things that we would expect to be impacted by these tabs. If I select the drop-down when we start to do data input, we would expect the sales tab to have impact on data input forms related to money ultimately coming in from the customers. That includes the major sales forms of the invoices if we sell things on account, and the sales receipts if we sell like at a cash register, as well as other forms like the receive payment on the invoice, the statements that we send out to try to collect on the accounts receivable, the estimates, the sales orders, and so on. We're now looking at the money going out cycle. So money typically goes out of the business primarily for goods and services that are purchased in order to help us to generate revenue within the business, which includes possibly the purchase of inventory in some cases, and sometimes expenses most of the time, and sometimes we purchase assets like property, plant, and equipment. We pay for things with an adjusted check form because nowadays we don't usually pay with checks, but rather with electronic transfers, which is the thing that's most likely to be connected to the bank feeds, which we're going to call an expense form, which is like a check form without a check number. Then if we buy things on account, which would happen typically if we have a larger business, usually because small businesses will usually pay for things with electronic transfers because that makes it as easy as possible to record things with the help and use of the bank feeds. But if we have a lot of transactions and the dollar amounts are bigger, then we would like to delay the payment as late as possible, taking advantage of the time value of money and maximizing our cash flow, which means we'd want to track the bill accounts payable so that we can pay for it as late as possible. Then we'd have the pay bill form, purchase orders, dealing with inventory, and then vendor credits and other types of forms. So that's what we're focusing in on here. Back to the cog up top. Going into the account and settings. We're in the expenses tab on the left-hand side. We're going to look at the first section, bills and expenses, noting we have the little pencil, meaning we can edit it, but you can click anywhere in this area and it goes into the editing fields. So we have show item table on expense and purchase forms. So as a product service table on the expense and purchase forms so you can itemize products and services. So this is similar to what we saw on the invoice form, meaning when we buy things, we might want to be buying inventory items. Now in the expense form, it's a little bit more confusing. Let me give you a recap of that. If I select the drop down over here and we look at an invoice or a sales receipt on the sales side of things, the things that we sell are going to be the service items or the inventory items. So that means that we're typically going to have a product or service as our primary field, and we're going to be adding those items to things that we actually sell, whether they be service items or they be inventory items. And if they're inventory items, do we track them on a perpetual inventory basis within the system? And so we'll talk more about that later. But if we're on the expense side, I'm going to leave this, leave without saving, yes, please. We're going to hit the plus button. And if I have a standard expense form, which is kind of like a check form, it's giving us our autofill thing over here. And notice this stuff with the images and whatnot is not as useful these days, given the fact that a lot of people use electronic transfers. But in any case, let's take a look at this. We're going to have then our categories down below. So oftentimes when we're paying for things on the expense type side of things, we're not going to be entering items unless we're buying inventory. So that means what do we primarily need? A category, which you can also call an account. This is the information pulling in from the chart of accounts. So usually in the classic view of the form, they also had another tab by default that would be down here for adding inventory items if I purchase inventory items and I'm tracking those items on a perpetual inventory system. You'll notice up here, if I go to the cog up top while I'm in this form, we have this option where it shows show item table, track by customer, and make expenses. So I could add it here, show item table, and then make sure you save your expense before you turn on the setting. So let's say turn on the setting. From here, I'm going to close this out. And now you have what used to be the default that was on all the time, which has our items down below. So the new system, the new form layout that doesn't have the items by default is possibly not a bad add, because most businesses, even if they deal with inventory, might not be tracking inventory on a perpetual inventory system. But if you are, meaning you're tracking you not only have inventory, but you're tracking the inventory not just by dollar amount and then tracking the units outside in Excel or in another website such as a Shopify store or something like that, but you're tracking the units of inventory using a flow assumption, typically QuickBooks using first in, first out with the online version at least, then you would want to enter the item down here so that you can add the item and track those units. So we'll talk more about that when we get to the inventory, but we are going to be turning on the items in our options so that we can see that field and test it out. So let's go back into our cog up top. Once again, back into the account and settings, back into the expenses tab. I'm going to go into it, and notice now I have now turned this on because we turned it on within the form. Make sure to make that adjustment. Otherwise that field isn't going to show up. So that's one of the not too many items that we have to actually change from the default settings in order to make sure that field is in place for us for our practice problem purposes, because we will be tracking the units of inventory as we do our practice problem. So track expense and items by customer. So adds a customer column on expense and purchase forms so you can track expense and list by customer. Now, why would you want to do this? Remember that when you buy things, if I'm paying like the Verizon or the AT&T, the telephone company, or I'm paying for the electric company, why would I need a customer field? Customers for QuickBooks are the people that pay us. Vendors are the people that we pay money going out versus money going in. So, but we might want a customer field on the money going out form, the expense form, the bill form, the check forms, because we might want to use the money that we paid in order to help us to populate an invoice. So we're actually going to test that out in our practice problem. So we will turn that on. Let me show you what I mean by that. Let's close this out and first look at an expense form, hitting the plus button, going into another expense type form. And you'll see that we just have category, description, and amount in our data input field. Where would the customer field be? It would typically be on the right-hand side here when I turn it on. Let's turn it on, and then I'll discuss it more. I'm going to close this back out, and then we're going to go back into the cog up top, and then I'm going to go into account and settings. Then in the expenses area, and we're going to go into the bills. Again, let's turn this on so we can track them by customer. And then we also have this billable item. Let's do this at the same time as well. Make expense items billable. So that says adds a billable column to expense and purchase forms so you can add billable expenses. So I'm going to turn that on as well. We'll test that out as we turn it on. When we make these things billable, we can mark it up. We'll talk more about these options in a second. But let's save these settings for now, close this out, and look at the impact on the form that we have now altered, going into the plus button, looking at the expense form, noting we'll have similar changes to the check form and the bill form, all types of forms for things that we're paying for vendors, for goods and services, for the business to help generate revenue. So now we have the category, we've got the description, and now we have this field now we have this field, which is billable, and the drop down over here for customers, which they made really small. You could make these larger, like you can adjust the size of the fields, kind of like Excel, by putting your cursor like in between these and adjusting the size of them. So that's going to be our customer. So I can check off billable and make a customer. Now, why would I do that? Well, possibly I want to track some of my data input forms and have a customer field to search on to give me a reason why I bought something. And I might want to make something billable. What does billable mean? That means that I'm going to have a job cost system, typically, like a construction company, like possibly sometimes a CPA firm or a law firm, although a CPA firm and a law firm are less likely to use this kind of billable item, instead using time tracking. In other words, when we have our staff working on projects, we want them to enter the time to a particular client, not so that we can pay the actual employee per se, because oftentimes they're on a salaried basis, but rather we need that information so that we can create an invoice. When you deal with construction companies, on the other hand, then you might construct your invoice based on the things that we're paying for that particular job. So you might go to a warehouse store, buy supplies for a particular job. You might track the amount of miles that you're paying for gasoline that you're paying as you're working on a particular job. So that means my invoice is going to be saying, hey, look, what I'm going to do is tell you exactly what I spent for the job that I worked on, and then possibly I will increase the amount by my profit margin. So I'm going to say, this is what I spent: gasoline, supplies, so on and so forth. And I'm marking it up by 30% because that's my payment. That's my profit margin, which gives me a very transparent invoice saying this is what it cost me, this is what I'm charging for profit, and this is my, and so here's how much you owe me, right? So to do that, we could make that easier by making this billable. Now note that there's some problems with that we'll talk about more later, and that problem comes up with the fact that when I make this billable, it's not like I'm adding an item, which is usually the thing that drives an invoice, meaning the items that we add will typically be the thing that shows what account's going to be hit with it, what type of income account will be hit with it, right? In general, let's say that's going to be the big thing. So if I say billable and I don't make an item, how does QuickBooks know which income account to hit? And worse, it might actually decrease the expense account, which is not what we want to happen. We want it to pull it into an income account. So that's kind of the pros and cons of this billable thing, which we'll talk more about possibly in our practice problem. But let's close this out and we'll turn it on for now, cancel the transaction. And if I go into the invoice, then the idea would be that I can then add the customer name, and then that customer name will have billable items that I can then pull into the invoice based on the bill, check, or expense form that I entered, making it billable to that particular customer. We'll take a look at examples of that when we get to the practice problem. Closing this back out, going back into the COG tab. One thing I just want to point out that this is kind of new that they have within the expense form, the COG up top, which gives you the specific options to change these things, these expense forms options within the form, as opposed to having to go into the settings. That's great. I think that's a good change. So I'm going to close this back out, but we're going to go back into the settings up top, into the account and settings. And so then we're in the expenses tab back in here. So we've got then the show items, we've got the track items. Now, once you have the billable items on, you could also do the markup. Now, to me, most of the time it makes sense to say, I'm not going to mark up if I paid gasoline was $30. I'm going to pull it into the invoice at $30. And then I usually would want to add another line item showing my markup transparently. But you might want to add the markup embedded in each of the line items that you purchase. That'd be another way that you could do it, meaning if I paid $30 for gasoline and I'm going to mark it up by 30, you can do a percent markup of each line item that pulls into the invoice on a billable rate. Track billable expense items as income. So they now have this as the default. In the past, this was not checked off as the default, and that was really causing problems because you would get people that would turn on the billable items, making their invoices look good, but instead of recording the invoices as income, they would reduce the expense account. We'll possibly show an example of this just to show you what you almost always do not want to do, because you don't want to say that I spent $30 for gasoline and then I was reimbursed for $30 of gasoline, therefore I have no expense for gasoline. No, you want to say I paid $30 for gasoline and then I billed the client in part based on the expense that I expended for that client for revenue of $30, and then I marked it up, right? So I want to have revenue of $30 plus the markup, whatever, $100, minus the expense of $30. I don't want to say it was a reimbursement because that's not how financial statements work, right? It was an expense in order to generate the revenue. So your tax return will be a mess if you don't properly allocate those because you don't have a proper income statement if you're calling it a reimbursement. All right, so change the sales tax. So you can adjust the sales tax. We'll talk more about sales tax in a future presentation. So default bill payment terms. So the terms are going to be something that usually is more applicable to an invoice, because if I invoice someone for the work that we did, then we want to say, when do we expect payment on that invoice? And the date that I put in will then be added 30 days for the due date, which I can then track and see if they paid us within that time frame. For the bills, it's not as useful most of the time, because if I get a bill, I'm not the one that gets to set the terms. The terms are set by the vendor. So usually if I enter the bill, I have to enter the date of the bill will be the date that I enter the bill, and then I'm going to have to enter the due date manually to make sure that I tie into what they told me the due date is, so I can track the bills by due date and pay them when they're due, so that I can avoid penalties by paying late. Now, sometimes possibly you can set the terms of a bill automatically if you get the bill automatically and the terms are always the same, but oftentimes you might have to manually enter the due date if you're entering bills instead of paying bills as they become due, possibly with the bank feeds. So let's look at the purchase orders. So purchase orders are a form that many small businesses might not use. Why? Because like a purchase order is a request for inventory. That means that you are using inventory, number one, and number two, you have the control over the purchase of the inventory to the degree that you can request inventory before they send it to you. Now, this is not always the case, right? Meaning when I buy something online from an online store like an Amazon, I have to pay for it at the point in time I request it, even though they haven't shipped it to me. But in some cases, if I was to order like 100 cups from China or something, you might have the capacity to say, I want to request the 100 cups. I want you to send them to me. Once they are in our warehouse and I count them, then we will pay you on it, right? Well, that's a different scenario. If that was the case, then the purchase order is just a request for the inventory. We didn't pay for it. We don't have the inventory until at least they ship it to us, or possibly by the point in time they get to our warehouse, at which point the bill will be in the box of cups, and we'll then enter the information in our system at that time once we've approved of the purchase order at that point. So that's going to be the purchase order. So a purchase order then is going to be a request form that we're going to actually give to a vendor. So it's going to be one that we want to have look nice and whatnot, because it's not just an internal form. So we could go to the custom fields if we want to set up the custom fields for the purchase order to manage your custom fields. Custom transaction number lets you use your own number system as opposed to just the default number system that's going to be in order of when the invoices are in place. default message on the purchase order. So you might want to put a message that's a default message that you can customize here on the purchase order. All right, let's go to the messages. So default email sent with the purchase order. So when you're sending out the purchase order, you might want a message on the email, not on the purchase order per se, but on the email. That's usually the way that you send the purchase order these days. So dear full name versus blah, blah, blah. This is your naming structure. Email subject line, purchase order from company name. You can change that if you want. And then the email is going to say, please find our purchase order attached to this email, typically with a PDF file attachment on the email. And then you can email me a copy so that we could send a copy to ourselves if we want to do that. Although if you send a lot of purchase orders, that's going to clog up your email. And then we could send a CC attachment or a BCC if we wanted to. All right, so that's going to be the general expense settings. Notice we have the QuickBooks checking that we kind of skipped over here. Let me take a quick look at that. Your banking and books all together. QuickBooks checking is a bank account with no monthly fees or minimums. Since payments and spending all happen right here, your books stay updated. So you can see the benefits, hit savings goals, get faster, and blah, blah. So why would you want to do this? Meaning, in other words, your checking account. Most banks can be attached to QuickBooks through the help and use of bank feeds, allowing you to import the transactions, helping you to either record transactions or at least to reconcile the transactions with a bank reconciliation. So why in the world would you want a checking account with QuickBooks itself? Meaning you're using now an Intuit QuickBooks, in essence, owner being Intuit checking account. Well, that's because then it might have some more integration in things like the invoice. So you will recall when we set up an invoice, we're going to email the invoice to a client to try to receive payment on the invoice. And the question is, to make that as easy as possible, we would like to give them payment options, but there's different kind of costs to different payment options, meaning they can email us a check, but if they email us a check, then that's going to be a slow process, and maybe we don't get paid as often because that's more labor intensive for them to do, right? Or maybe we try to give them a link to do an electronic transfer with our bank, whoever our bank is, Bank of America or whatever. That would be fine, but it's not something that's integrated into QuickBooks because it's not the QuickBooks checking. We could try to get it set up so they pay us by credit card, which is great, but the credit card often charges us for those payment options. So it would be better if we can get a payment option which doesn't charge us like sometimes the electronic transfers for bank fee. Possibly we can use PayPal, but not everybody uses PayPal. So that's an issue. So we could do the electronic transfer with a QuickBooks checking account, which is more easily integrated into something like the invoice, possibly making that transition of having people pay you electronically directly to your checking account easier. So that's why you might think about this kind of setup to have a QuickBooks checking account mainly, because that could make the collection process a little bit easier. It might make it so that they can record not only the electronic bank transfer, but actually tie it to the invoice more easily. And so that's why you might use that one. All right. So that's going to be the QuickBooks banking. We did the expenses. And so let's take a look at the time one. So general, first day of the week. So we're going to be saying, what's the first day of the week? Some people think it's Monday, but we usually say Sunday is the first day of the week. So we're going to keep it on Sunday. But if you have a 5-day week, maybe you say it's Monday to Friday. But we're going to keep it as the default. The timesheet shows service field. So when entering timesheet, lets you specify services performed. So timesheets are going to be important, not just if you have employees to process payroll if on an hourly basis, but also to make things billable, for example. And to make them billable, it would be nice if you had the service field that you could put the thing that was done, the work that was done, so that when you pull it into an invoice, you have that information. We might show an example of that later. Show time to be billable. So on timesheet adds a check box to specify whether activities should be billable to the customer. Now I'm going to actually turn this on. So it is on by default. Great. So show billing rate to users entering time. So if you bill customers to different hourly rate, then you pay your employees and subcontractors, you may want to leave this blank. So in other words, the default is that it's going to be blank. If we enter billable time and we're in like a law firm or a CPA firm, our staff is going to enter the time. We use that to then create invoices to the customers. We want that information to be pulling into the customer invoice, and we'll talk more about how to do that later, but these are the settings that we want on that. That looks good. Let's look at the advanced tab. So we'll try to go through these fairly quickly. We're running long here. So accounting method. Typically, you want the accrual method. Now, a lot of people kind of argue on this one, like I want to be on a cash-based method because it's easier. That's what my tax return is on and so on. But remember that there's only a difference under the accrual method and the cash method if there's a timing difference from when you get money on the sales side and when you do the work, and on the vendor side, on the payment side, when you pay the money and when the work was done for you. So if you're in a simple business on a cash-based system, there will be no difference, and therefore there's no difference between a cash basis and accrual basis. So you could say you're on a cash basis, but really you could also say you're on an accrual basis. The fact is you're just in a simple accounting system that has no difference in timing from when you got paid or when you pay and when you did the work to earn the pay or incurred the work done by others to make the payment. So that means that most people, they want to have the accrual on here. So if you feel the urge to toggle to cash, you want to make sure check with your accountant on that one. I think they would probably talk you out of doing that. Even if you're on an accrual basis and you wanted to run your reports on a cash basis for whatever reason, you can usually toggle the accrual versus cash settings on the reports to make that adjustment. And so again, I would keep it on accrual as the default. So customer label, so certain types of industries might not call them customers. So if you're using QuickBooks for a not-for-profit, then you're going to pretend like money doesn't matter, even though it totally does. Not-for-profit people, or that, you know, I'm not saying anything against not-for-profit organizations because there's different things specific to not-for-profits, but the fact that they don't have a profit motive doesn't mean that money isn't important. It actually means that you have to increase the level of internal controls. Otherwise, things get bloated because there's no market that's holding things in check, as we can clearly see with, for example, our federal government, which I can't say it enough, that Doge and Musk are in there cutting things out like it should, and that's a good thing because, again, they get bloated. That's the problem. They're bloated and they've got no market. Anyway, so you go cutting that stuff out of there. It's ridiculous. Anyways, so you got the donors and then you've got guests. You might call them members, patients, tenants, and so on. So if you want to change that on the forms. But we're going to keep customers for ourselves, and that's the default setting. Communications with Intuit, so we'll keep that there. We've got the accounting. First month of the fiscal year, January. Now remember, when you hear fiscal year, or you kind of think calendar year. Calendar year has a year end of December, which normally you would think that's the date they would put here, the end of the year. But no, they want the beginning of the year. For normal people that have a fiscal year equal to the calendar year, the beginning of the year, which is here by default, is January. It's only if you have a fiscal year different than the calendar year, possibly because you have a type of business that has a natural busy season, like Christmas is your busy or something like that, right? Then you might have a difference. But that difference is usually going to also possibly be reflected on your taxes. So small businesses usually have less ability to change their fiscal year from a tax standpoint that tries to keep them on like a calendar year. So if you're a sole proprietorship or partnership, you might have a different year, but possibly not. So just make sure that you check with your accountant so you have the fiscal year correct. So first, and then make sure that you're defining the fiscal year by where it begins, not where it ends. So first month of income tax year. So usually that's going to be the same as you have up here, but sometimes it might be different in some cases. So be aware of that. Accounting method. So again, we're going to be using the accrual. I'm going to be using the accrual by default. Same arguments I had before. If you feel the urge to change it to a cash-based method, then talk to your accountant, make sure that they're on board with that. Close the books. So note that closing the books becomes an issue. A lot of small, let me just lay this out. When you do taxes for small businesses, all you really need normally is an income statement, because in the United States we have an income tax system. But if you don't use QuickBooks or some other accounting software, you're not utilizing the double entry accounting system, but possibly just constructing an income statement, which is less efficient and likely that you're going to cause an error because you're not using the double entry accounting system. By using QuickBooks, it forces you to do a double entry accounting system, which means you're also creating a balance sheet and an income statement. Now, if you have QuickBooks, you still run into problems, and that problem usually comes up when you delete prior period transactions. And the reason is because the income statement is kind of analogous to a performance statement, like how many miles can you drive in a day? And then you reset the odometer. So if you said, for example, that I drove 150 miles yesterday, I reset the odometer, and now I'm going to start driving today, but then you went back to yesterday's data and you changed it to like 100 miles yesterday, then the problem is you're not starting from the same point, right? The balance sheet represents total miles driven, and now you've changed last period. So that becomes a problem. So what we want to do is, after we close the period, in particular the year, and have now reported that on the tax return and or external financial statements, we want to limit people going back and being able to mess up the performance statement in the prior year, and rather than do that, make the changes in the current year so that the retained earnings, which is going to be basically the odometer over the life of the company, rather than just one period that we're keep on resetting, has the same beginning balance. Okay, so you could set, so if you toggle that on, you could set some restrictions so people can't mess up the closing balance, which is typically a good thing to do oftentimes. But we're going to keep it off for now, which is the default. So be careful if you change any prior period transactions, because it'll cause a problem. And a lot of times some accountants won't pick it up if they do your taxes, because they're not checking the rollover retained earnings, which means you possibly could be recording income twice. You could be misstating something, right? So if you're a tax preparer, it would be nice as a general rule to double check the balance sheet beginning balance to see if they did roll over retained earnings properly, and if not, try to figure out the difference so you can properly record the income statement in the current period. But that's a different story for another time. So company type, tax form. So this is one of the settings that we set up when we set up the company file that you can always change. So it's not a big deal, and it doesn't have a big impact on like the financial statements per se, generally. So if you're a sole proprietor, if you just have one business, if you just have a hot dog stand and you just start selling hot dogs, then if you make money, the government wants a piece of that and you're a sole proprietor. If you lose money, then the government doesn't want any part of your losses, really. You might still have to file, but they're not like going to be pitching in on your losses typically. Although you might get a benefit for them going in the future. But in any case, that's the thing. And now if you have two people that own the hot dog stand or more, then again, the government wants part of your money. So, but you're going to have to file a separate return in order to allocate the income using a K-1 form to the individual tax returns. And then you might be an S corporation, which is a type of corporation. You might be a normal corporation. You could be a not-for-profit, and so on and so forth. So those are the structures of business. We're going to keep ours on the sole proprietorship, noting changing these don't have a big impact where you would think they would, which would mean changing the general ledger accounts, because they just give us a giant general ledger account and we have to change them manually, meaning, for example, retained earnings that they gave us on the general ledger is a corporation type of name. And if I'm a sole proprietorship, you might want to rename it to like equity or something like that, or owner's equity or something. So we'll keep it there. Let's look at the next one. Enable account numbers. So by default, we don't have any account numbers. That's possibly good, especially for small businesses that don't know how to deal with account numbers. I think we have a whole nother course or section if you want to add account numbers, which does give you more flexibility over the ordering of the accounts. The problem is if you misuse account numbers, it becomes really ugly and messy. Why? Because the accounts should be ordered first, not by account number, not by alphabetical order, but by balance sheet accounts on top of income statement accounts, meaning assets, liabilities, equity, income, and expense accounts. And if you number things that are not in that order, then it's going to look all messy, right? Because now you've got account numbers that aren't in the proper order. It should be in numerical order, but it's not going to be because it should be the balance sheet on top of the income statement. You hit the wrong account numbers. Also, people don't properly spread out the account numbers. And therefore, if I name all of my expense accounts, 1, 2, 3, 4, 5, 6, 7, 8, 9, and then I want to add another expense account between accounts 7 and 8, I can't do that because I didn't leave any numbers between accounts 7 and 8. And then what am I going to do then? It becomes a mess. So you want to make sure that if you add account numbers, you think about how to add the account numbers. There's general principles that you can use, and that will give you more flexibility or the ability to then keep an ordering system of your accounts that's the same within account categories, such as the biggest account category, which usually is expenses, which we can have some ability to adjust without account numbers using sub-accounts, but would have much more ability as we add expense accounts to keep them in the order that we prefer using account numbers. All right, so we have a whole nother course or section on that. Tips accounts, the account that goes with this setting. So if you're dealing with tips, you might have specific settings that deal with tips, and you'll need a tip account that deals with them, such as adding a tip field to the invoice form, for example. Billable expense income account. So we talked about the idea that you could make certain items billable on the expense form. But because the expense form billable items aren't adding an inventory or service item, which is usually the thing that assigns an account, QuickBooks doesn't know what account to hit with it because the only account associated with the expense form is typically an expense account like a telephone expense. And you don't want to hit the expense account because that would be like a reimbursement. You want to hit an income account. So all it can do if you use the billable thing is create a generic income account, which is often okay, totally fine, because usually we don't have a whole lot of different income accounts. So, but sometimes you might want to hit a specific income account, and you can't really do that as easy with the billable functionality because all you can do is hit a generic expense income account, which might be called billable expense income, the default, or refunds expense, sales expense. So it's just giving you expense accounts options. And then, of course, you could create your own account and then point it to that expense account. So you make your own expense account and then tell it where you want it to go using this field. All right, let's go to the next one. Categories, class tracking and location tracking. We have whole other courses based on class tracking and location tracking. These are really cool options, but people get all confused in terms of when they're applicable, and then if applicable, which one to use, because there's a lot of overlap between them. But the general idea is if you have your income statement, sometimes you might want to break out your income statement in columns based on categories, such as, for example, region. You might have different locations. So you have total income, and then you break out columns for which location those columns are at. or you might break it out for other like departments, for example, which you might use like class tracking. So you could use both class tracking and location tracking in certain instances. And tags are similar, but a little bit less like detailed than class tracking and location tracking, but they have a similar functionality. So anytime you're thinking about breaking out the income statement in multiple columns by location or by some other kind of category, sometimes you can use class tracking if you're a small business to use one QuickBooks file to do both your personal bookkeeping and the business bookkeeping. Most bookkeepers not recommending that because they don't like the interplay between those things. And traditionally, we would like to have at minimum a separate checking account and at maximum, usually 2 separate files for your personal QuickBooks file that you could still use to track your personal information, which works just fine, and a business one. But the problem is then you got to pay for 2 QuickBooks files and you have to do transfers between the 2 of them. Whereas if you have one account, then you could use class tracking to break out the income statement, which is all you really need for the business side of things, for your sole proprietorship tax return, if you only have a sole proprietorship. So I'm not talk to your accountant. They'll probably try to tell you not to do that or whatever, but it's possible to do. We have courses on it if you want to look at those options and on how to do what you could use these things for in other presentations. You also could use these things for like not-for-profit organizations where you have to do different categorizations. But then we have the automation. So pre-fill forms with previously entered accounts. That's going to be highly useful on as default because, for example, if you enter an expense account, you would like the next time to enter the expense account for it to remember the vendor and the related account that you assigned to last time you paid. For example, AT&T, you charged it to your utility account. You would like next time you pay AT&T for it to know and auto-populate that you were going to pay the utility account as the expense. Automatically apply credits. So credits are going to be things like for example, so let's say automatically apply credit to next invoice. So on the accounts receivable side, it's possible that you get a prepayment. So if the customer pays you before you actually do the work, then you're going to say, we call that a credit balance. We'll talk more about that terminology. It's a little bit weird in future presentations. But once I make the invoice, then we could have a system where it automatically applies the prepayment to the invoice once I record it. Or you might say, I don't want to do that because I have a more complex system. I want to manually apply out the credits to the invoice. So we'll talk more about that later, but this is on by default, which is usually the way that you would go unless you have a complex system of prepayments. Automatically invoice unbilled activity. So automatically creates invoice for customers with unbilled activities. What are unbilled activities? If we're using billable expenses, meaning adding the customers to the expense form to then pull into the invoice, or adding billable time, both often used in certain types of industries that have a job cost system like construction companies, law firms, CPA firms, then this would automatically create the invoices based on those billable items. But oftentimes we have it off, as it is off here by default, because usually if you're in a job cost system, you bill people periodically, like at the end of the month or something like that. And therefore so you might not want this on, so you could do it periodically. Automatically apply bill payments. So when you add bill payments in the register, this setting automatically applies the payment to the oldest bill. So when we enter the bill payments in, it would be applying the payments of the bills to the oldest bill within the system. So we have that on, by default. Usually when we pay the bills, we're going to actually select the bills that we want to pay within the search field, which we'll talk more about that later, but we'll keep that on as the default. Projects. Organize all job costs related in one place. So if you're in a job cost system, we have a whole nother course or section on job cost systems. It's a specialty field in and of itself, particularly if you have like construction or longer job kind of systems. And the old desktop version, we used to use what we call jobs, which can also be called sub-customers, which is the terminology that was then used in QuickBooks Online. But then they also added this other feature, which is projects, which basically does the same thing, but is a little bit different than the old functionality of a sub-customer or job. And so again, it's a specialty area in and of itself for typically job cost kind of systems. We have other courses or sections that dive into it in more detail. Currency. So home currency, we're going to use the United States currency. If you're in another country, then obviously the double entry accounting system will always be the same. It's universal. But the things that will change are the currency. So if you want to use a different currency, that's not going to change the data input format generally. You should be okay to do that if you're more comfortable with that. But taxes will change. So when we get into the taxes are going to be specific to location. Taxes typically fall into the taxes for the government, which might be a consumption tax, which we call a sales tax here, and the payroll taxes. Now, if you have multiple currencies, you can turn this on. This would be that you're receiving or making payments in more than one currency. That gets somewhat complex because you end up with exchange rate differences over time. We have a whole nother course or section on that. So if you're in that situation, you might want to check that out. But we're going to stay in one currency as the default. Allow members to find me. When members search their network, limit information for your profile. So you might want other members to be able to locate you possibly into it. Can help with marketing, for example, if you're like a bookkeeper. So we'll keep that as the default. And then other preferences, date format. So this is the default date, month, day, year. But you might also prefer, the dashes. You might want the year first. Sometimes this way is actually the best way for saving documents, right? Because then it's going to save the document by year, then by month, then by day, right? Which makes sense. Whereas if you save documents this way, it's going to save month first, which means it's going to have all the months no matter what year it is in. So 2000, 2001, 2002, all the Januaries are going to be together, which is weird. So see what I mean? So sometimes this is the most efficient way to save things if you're going to be often ordering them. But this is like the most common default where I'm located. So currency, this is in dollars, so you can put the dollar sign at the end. And if you use decimals in the currency system, then possibly you can do that. This is the currency that I'm most used to here. That's what I'll stick with. Customer label. So customer, again, versus donors, guests, and so on. We saw that before. Warn if double check number is used. This is a common internal control when using checks, which most people often aren't doing anymore because we have electronic transfers as the default. But if you're using checks, you will have to actually print the checks, but have pre-printed checks, even if you're printing them out of QuickBooks. And you want to have that on typically as a default or internal control. Warn me if I enter a bill number that's already been used. So this one is not as important and is off by detail. I'll keep that on as the preference, but the bill numbers are usually numbered kind of automatically as you enter the bills. Warn me if a duplicate journal entry number. Same with the journal entries. When you enter a journal entry form, it's going to give you an automatic numbering system, but that numbering system is not as important typically as tracking the check numbers, because the check numbers, the internal check numbering system we have should tie out to the external checks that we're actually using, whereas this is not the case with these two. That's why they're off by default, possibly not as significant or important. So sign me out if inactive for. So now the question is, how long should QuickBooks be on the screen for before it automatically signs you out? So some random person doesn't come over and start messing with your QuickBooks file. It's an hour by default. You can go to 2 hours to 3 hours. Those are your options there.